Good afternoon, AMC Apes and Retail Rebels. I'm Andrea, back at the Meme Market Now studio with your daily AMC update, where the community reigns and diamond hands never fade. Kicking things off, the biggest headline for AMC Entertainment today is all about the company's major debt refinancing announcement. AMC has just completed a series of debt deals, bringing in around $244 million in new financing, equitizing up to $337 million of debt, and settling litigation with holders of their 7.5% senior secured notes. All moves aimed at strengthening the balance sheet and fueling AMC's comeback amidst a robust box office recovery. For retail investors, this means AMC's long-term fundamentals are looking more stable, which could be a positive backbone for future moves. But with the share price recently dipping to $3.045 and falling for 6 straight days, investor sentiment is split between concern and cautious optimism. To go deeper on today's ape-raising action, let's cut to our man Paul with the ape lysis. Paul, over to you.
Thanks, Andrea. Reporting from the Meme Market Now office, let's break down what this refinancing really means for the apes. First off, the price action. As of July 29th, AMC closed at $3.045, down 2.1%, and recent sessions have shown heavy volume with more than 9 million shares trading hands, yet prices have trended lower for 6 consecutive days. Short interest remains a major focus on the forums, with many apes seeing this volatility as potential fuel for another squeeze. On the options front, open interest is ticking up around $3 and $4 strike calls for August and September, evidence that some retail traders expect a rebound now that the debt overhang is easing. Scanning the socials, apes are divided. Some are celebrating the newfound financial flexibility and calling it proof that AMC's never going bankrupt, while others are waiting for proof of box office receipts before raising their price targets. All eyes are now on Q2 earnings, set to be announced soon. Back to you, Andrea.
Thanks, Paul, for that sharp ape lysis. Now, our second big story today is the growing buzz around AMC's upcoming earnings call and the movie slate for late summer 2025. With the company now carrying a cleaner balance sheet, apes and analysts alike are awaiting blockbuster numbers from a season packed with major releases and packed theaters worldwide. The earnings announcement, scheduled for next week, is being hailed as a critical catalyst that could swing sentiment and reignite bullish momentum if results beat expectations or management provides a bullish outlook. For more on how the momentum is building at the local level, let's head out to the heart of the action. Here's Farah reporting live from outside an AMC theater.
Thank you, Andrea. I'm here at AMC's flagship location, where the energy is electric. Tickets are selling fast for the summer's biggest films, and retail shareholders are out in force. I spoke to several moviegoers who are also self-proclaimed apes. They told me they're holding their shares through thick and thin, and several mentioned buying the dip on weakness after the recent refinancing news. Social media is buzzing with posts of packed showings, memes about refinancing for the win, and communities organizing shareholder meetups for next week's earnings call watch party. The crowd here is hopeful, upbeat, and ready to hodl, convinced that AMC's new debt strategy could be the spark that lights another rally. Back to you, Andrea.
Thanks, Farah, and a big shout out to the Ape Nation showing that dedication. Let's recap. AMC's bold refinancing is giving the company breathing room. The stock is in a tug-of-war between uncertainty and optimism, and anticipation is soaring for next week's earnings and the summer box office. Don't forget, ape together strong. Smash that like button, subscribe, turn on notifications, and drop your price target DD or biggest popcorn moment in the comments below. I'm Andrea with Meme Market Now. Stay united, stay informed, and never let go of those diamond hands.